Nancy Pelosi, that Capitol Hill stock god with the legendary inside scoop, just made a move that has everyone talking. She sold $50 million worth of Apple, $5 million of Nvidia, and another $5 million of Disney. Seeing those numbers, is your heart racing a little bit? You're probably thinking, it's over. If Pelosi is clearing out her portfolio, is the US market about to crash? Should I run to? But before you hit that sell button in a panic, I need to tell you the truth. Don't just look at what she sold. We need to read the underlying logic of this operation, because the devil isn't in those massive sell orders, it's in the tiny, overlooked buy orders that most people completely missed. Seeing wealth a step ahead. Hello everyone. This is Ultra Bull Macro. Today's video might shatter your traditional views on shorting and going long, but trust me, if you stick around to the end, you won't just understand what game Pelosi is playing. You'll learn a top-tier strategy that allows big money to survive and make massive profits when the storm hits. First, let's tear apart that screenshot going viral online. What are the marketing accounts screaming? They're yelling, Pelosi dumped $60 million in stock. The tech top is in. You're not wrong, the data is real. Given the huge volume, she is indeed reducing her position in actual shares hard assets. She sold $50 million of Apple and $5 million each of Disney and Nvidia. If you only look at this half of the story, the conclusion is terrifying. It looks like she's cashing out and leaving, doesn't it? It looks like she thinks prices are too high. But friends, don't jump to conclusions. Move your eyes down to the column many people chose to ignore. What did she buy? She bought Google Leaps for $500,000. Amazon Leaps for $500,000. Apple Leaps for $500,000, and Nvidia Leaps for $250,000. Do these tickers look familiar? Google, Amazon, Apple, Nvidia. You'll discover a shocking fact. The tech giants she sold are almost the exact same companies she bought. This gets interesting. If she was truly bearish on US tech stocks and thought the bubble was bursting, she would have bought SQQQ, held cash, or bought government bonds. But she didn't. She sold Apple stock and flipped it into Apple options. She sold Nvidia stock and flipped it into Nvidia options. What does this prove? It proves her judgment on the direction hasn't changed at all. She is still bullish on AI, still bullish on the tech giants, and still bullish on the US economy for the next year or two. So the question is, if she's bullish, why go through all this trouble? Why sell the stock just to swap it for options? What is the secret behind the massive spread and this mysterious tool called Leaps? We have to stop here for 2 minutes to clear up a concept, because not understanding financial tools is exactly why retail investors get crushed. Pelosi's calls have a special name, Leaps. That stands for Long-Term Equity Anticipation Securities. In plain English, these are deep-in-the-money call options, valid for a year, or even 2 years. Don't let the jargon scare you. This channel is about explaining finance in language everyone understands. Let me give you the simplest analogy. Suppose you think a house, let's call it Apple, will definitely go up in price over the next 2 years. The current price is $1 million a set. Strategy A is buying the stock. You put down $1 million cash and buy the house. The good news is the house is yours, and you keep all the gains. The bad news is you tied up $1 million cash, and if there's an earthquake, the market crashes and the price is cut in half to $500,000, you have realized a hard loss of $500,000. This is heavy asset holding. Now strategy B is buying Leaps. You go to the landlord and say, I won't buy the house now, but I'll give you a $50,000 deposit to sign a contract letting me buy it at today's price in 2 years. That $50,000 is the option premium. Here's the magic. If the house price goes to $1.5 million in 2 years, the strategy A guy makes $500,000. But you, with strategy B, even though you only paid a $50,000 deposit, you capture that same appreciation upside. You make nearly $500,000 profit using only a $50,000 cost to control $1 million in assets. That is leverage. But more importantly, look at the risk side. If the market crashes in 2 years and the house drops to $100,000, the strategy A guy loses $900,000 and is crying his eyes out. But you just throw up your hands and say, I don't want the house. Keep the deposit. Your maximum loss is just that $50,000 deposit. Get it? This is exactly what Pelosi is doing. She sold $50 million in Apple stock, instantly recovering $50 million in cash. Then she took a tiny fraction, a few $100,000, to buy Apple Leaps. There is a professional term for this in finance called the SH replacement strategy. Its core logic is just 8 words: keep the upside, cut the risk. If Apple keeps skyrocketing, her Leaps skyrocket too. She doesn't miss out. If the US market crashes due to interest rates, war, or the election, and Apple drops 40%, the stockholders see their assets shrink by 40%. She only loses that small option fee, while her tens of millions in recovered cash are sitting safely in bonds, earning interest or waiting to buy the dip. So, conclusion number 1. This is not panic selling. This is a textbook risk transfer. She transferred the risk of principal loss from herself to the market. Now that we know how, let's dig into why. Why specifically now? Not 6 months ago, not 6 months later. Capital at Pelosi's level has an extremely sensitive nose for the market. Without getting into conspiracy theories about insider info, just looking at the trading logic, we can clearly see she sniffed out 3 extremely dangerous signals. Do you feel them? First, the market is rising, but it feels weird. The expectation for Fed rate cuts went from imminent to wait and see, and some are even calling for hikes. Second, it's a midterm election year, and policy uncertainty is increasing. Third, AI capital expenditure is getting higher, but the turning point for profit realization isn't fully visible yet. For billions in capital, uncertainty itself is the biggest risk. When uncertainty gets high enough, smart money refuses to streak, aka, go naked. What is streaking? Holding a full position of stocks is streaking because you expose 100% of your principal to the gunpoint of volatility. Pelosi's subtext here is, I am not sure if a black swan event is coming, and I don't want to gamble, but I don't want to miss the bull market. So, I'm putting on a bulletproof vest these leaps. We have to admit, the magnificent 7 tech giants aren't cheap right now. Nvidia, Apple, they are near historic highs. At this level, the risk-reward ratio of holding the stock isn't proportional anymore. If you hold a full position in Apple, it goes up 20%, you make 20%. It drops 20%, you lose 20%. But for Pelosi, who has already made a fortune from the bottom, that's not a good deal. She is locking in profits at the top, while keeping a small lottery ticket in the game. This tells us big players believe the close your eyes and buy phase of the US market is over. We are entering a fishtail market, or a period of high volatility. Notice the expiration dates on her leaps, usually a year or more. This is key. She isn't betting on next week's earnings or next month's CPI. She is betting on the tech trend for the next 1 to 2 years. This gives us a crucial insight. Big players don't buy today's ups and downs. They buy time. She is willing to pay a premium to buy a window of time where she survives a crash but stays in for a rally. So, to summarize this part, Pelosi is not bearish on AI, not bearish on US stocks, and not bearish on the US economy. She is bearish on the risk of holding heavy positions at high levels. She is bullish on the flexibility of having cash. Okay, the logic makes sense. Now for the most critical question. For you watching this, retail investors like us, with only tens or hundreds of thousands in capital, should we copy Pelosi's homework? Absolutely not. Do not blindly copy. Why? Because your account structure is completely different. She has hundreds of millions. If that $500,000 option goes to zero, that's just a few fewer Hermes bags for her. But if you take your life savings to buy leaps and the market goes sideways for a year, the time decay will grind you down to nothing. However, while we can't copy the amount, we can copy the logic. In light of this event, I'm giving us ordinary retail investors 3 executable strategies. Strategy 1. Learn to de-risk. If you are also fully invested in tech and have made good money, but you're starting to panic about a pullback, you don't have to buy options because there's a learning curve, but you can learn her cash recovery mindset. Try selling half your stock. Take your principal back and let the profits run, or swap some high volatility pure tech stocks for low volatility index ETFs or high dividend stocks. Having cash in hand at this stage gives you the power to buy the bottom. Don't let yourself just stare helplessly every time there's a big drop. Strategy 2. For advanced players, try the budget leaps. If you understand options a bit, and your funds allow, it's say you have over $50,000 to $100,000 you can try. Replacing stocks with deep in the money calls. Remember these key points. 1. Delta must be high, choose 0.8 or higher, so it moves like the stock. 2. Time must be long by at least a year out. Don't buy next month's, that's gambling. 3. Position size must be small. If you plan to buy 100 shares for $20,000, now you only need one leaps contract for maybe $3,000 or $4,000. Put the remaining $16,000 into a high-yield savings account. You've just built your own interest-bearing structure. Strategy 3. Don't touch options, but learn anti-fragility even if you never touch derivatives. You must understand one thing, do not add leverage to chase highs at this position. Pelosi is deleveraging, so why are you doing the opposite? Because selling stock to buy leaps is a form of deleveraging capital. If you go on margin to buy stocks now, aren't you walking right into the line of fire? The strategy now should be a barbell strategy. One end is extremely safe assets, cash and bonds make up the bulk. The other end is high-odds assets, a small amount of tech leaders. Cut out all those mediocre companies in the middle. I've said all this, but I know when the market opens, 80% of people will still get it wrong. Why? Because the retail investor's biggest enemy isn't the market, it's their own emotions. Let's look at the 2 common ways retail investors die regarding this Pelosi news. Death type 1, the frightened bird. You see the headline Pelosi sells 50 million, you don't check what she bought, and you get scared and sell your good chips. 2 days later, the market bounces, and you're slapping your thigh in regret. This is typical hearing wind and thinking rain. Your moves are based on clickbait. Death type 2, the blind worshipper. Wow, the stock god bought options. Options make money fast. Then, without knowing what a caller put is, or what a strike price is, you rush in and buy a bunch of weekly expiring options. 2 weeks later, they go to zero, and you're cursing the world. Friends, don't be naive. Pelosi's homework is reference material for the honor students, not a cheat sheet for the failing students. She is playing math, probability, and risk control. You are playing with heartbeats, greed, and fear. In this market, the real danger isn't the drop or even the crash. The real danger is using the wrong structure to hard carry uncertainty. It's having a budget for cabbage but worrying about the drug trade. Don't stare at how much she made. Look at how many defensive moves she made to avoid losing big. Surviving in the US market is the only hard truth. Finally, some heart-to-heart. Nancy Pelosi might be controversial in politics, but in the investment world, or asset management, she or the team behind her are absolutely top-tier hunters. Her operation this time actually taught us all a vivid lesson in risk management. She is telling us that even top players with information and capital advantages maintain a sense of awe toward the market. She doesn't dare run naked with a full position. She doesn't dare bet on a one-way street. She is even willing to sacrifice some profit to buy insurance. If you are just an ordinary person with no inside info and no hedging tools, what makes you think you can go island and walk away unscathed? Investing isn't a 100-meter sprint to see who runs fastest. Investing is a marathon through a minefield. Smart people don't just know when to charge. They know when to put on a flak jacket. I hope this deep breakdown of Pelosi's sell stock, buy options move helps you jump out of the sensationalist fake news and see the underlying logic of capital operation. Don't be a sucker, be the person who sees where the sickle is swinging. This is Ultra Bull Macro. If you found this useful, even if it just saved you from losing a little money, please like and subscribe. You aren't alone on the investment road. See you next time.